follow us and subscribe. This is, everything that you see here, you're going to have a recording of it on YouTube, right? So make sure you like and subscribe so you get this sort of thing that comes out in the future as well, right? So without further ado, guys, I want to introduce Greg, machine learning genius that teaches the machine learning course here at LumiWealth, right? Greg, do you want to take it away?
Yeah, of course. Thank you, Robert, for the introduction. Hopefully everyone can see my slides. And let me go to presentation mode. Actually, I'm going to switch screens just so that it's I have better eye contact here. So let me share screen again. Okay, good. So hopefully everyone could see my slides here. So as Robert mentioned, my name is Greg Tanaka, and this webinar is going to be about a demo of a machine learning-based stock forecaster that's using natural language processing to get data to train a model to help forecast a stock price better. And so the basic agenda is just basically want to talk about who's on the call, give a quick introduction, and then we're going to talk about our machine learning-based forecaster, what kind of training returns that we've been getting, the tools that we'll be using, the code, be giving a demo, talk about the courses, then of course questions. And so I wanted to keep this thing interactive. So if you guys can, there's in Zoom, there's a little chat box. Basically, I guess you guys probably can't see this, but there's a chat box. There's also Q&A. So you can go into either. So you could put onto chat if you want to see something. Oh, there you go. Thank you, Jeffrey. Or you could go to Q&A and ask questions there. So either way works. So let me dive into this. So I think just so that I have a better feel about who's on the call and I could kind of tailor this accordingly, I think it would be great if everyone can type out in the Zoom chat, what is your occupation? Do you know how to program / code? And what kind of investment experience do you have in years? So I'll go first to kind of model this. So I'm a machine learning expert, and I've been programming since I was 7, or actually 6. And then
well, why did you start so late, Greg?
I don't know. late kid, I guess. And then in terms of investment experience, I started like option trading right after college. And now I do a lot of stuff around crypto. So that's my experience. So I just put a little bit of background in that so that you kind of see. So if you guys could do this would be great. That way you guys know who else is on the call, and I'm able to tailor this for the audience. So okay, yeah, thank you, Anton, for putting your experience. So let me first introduce myself. Greg Tanaka. I've been doing machine learning for some time now. Most recently, I started a company called Percolata. We raised about north of 10 million, almost about $14 million from Andreessen Horowitz Google Ventures. I went to Caltech and Berkeley for college, studied electrical engineering, computer science, done 4 startups, do a lot of work around machine learning, especially around forecasting. And my current company, Pika, does a lot of work around algorithmic trading, especially around this area in crypto called decentralized finance. So I'll talk a little bit more about that later. And then LumiWealth. So LumiWealth is an organization that really caters to trying to teach people how to fish. So it's one thing to be handed a fish, another thing to know how to fish. And what I mean by that is teaches you kind of the basics of how to do algorithmic trading. So there's a bunch of different courses. I teach the machine learning one, but there's one on crypto. There's one on kind of basic algorithmic trading. And I think there's one other. I forgot isn't there one more, Robert?
There's an options course as well.
Oh, there's an options one. That's right. I forgot. And so each of us are expert in our respective areas. And Robert is the founder and CEO of LumenWealth. So we're blessed to actually have Robert here as part of the folks that can help answer questions. So as Robert mentioned, if you haven't already, you really should check out the YouTube channel. Let me just click on this. There's a lot of great content on here. You can see the one that we're recording right now live, but there's a bunch of other free content on here that's very informative. So I highly encourage you to subscribe, watch them. They're really quite good. And then we also have a Discord channel. So this is the invite code. So, this is something which you could just join even without having to pay. And the nice thing is there's a bunch of experts on there in all around kind of the augmented trading area. So in crypto. So lots of really good stuff here. So definitely look at joining this Discord channel.
And I'll put a link to our Discord, by the way, into the chat, just because I feel like this is so useful. The games of the world, I feel like it'd be good for people to see everyone and meet everyone else in this community, right? So I'm going to post the link inside of the
augmented
chat.
Trading area. In crypto. So I think, sorry, the YouTube was auto playing.
Yeah, it was auto playing. Yeah. There we go.
So, okay, sorry. And as you can see, there's like 93 people online. So this is like a super active group. So highly encourage you guys to go on there and, you can meet like-minded folks and lots of people answering and asking questions. And then at the end of this webinar, Robert's going to send a little survey out, and we're also looking to improve. So this feedback is really important. So I encourage you to enter the survey. And then, as I mentioned, I like to keep this interactive. So, as you guys have questions about anything I'm talking about, if something's not clear or if you have a point, please drop something into the chat. I have the chat open on one screen, and I have my Q&A also open on another screen as well. So why don't you do that? And then I've seen a bunch of people kind of give a little introduction to themselves, so that's awesome. I'm just kind of scrolling through that right now. So it looks like some people are, expert in machine learning, and some people are, kind of fresh to all of this. So that's great. All people are welcome. So let me kind of dive into what are we trying to do. Essentially, what we're doing is, if you think about the core of trading, it is essentially forecasting, right? You're trying to predict what's going to happen, and so if the stock's going to go up, you want to buy. If the stock's going to go down, you want to sell. And this applies to any security, whether it's a crypto, a token, whether it's futures, whether it's forex, whatever it might be. You have to have some sort of idea of where that thing's going to go, and you're trying to make a prediction about it. And or like one thing I do in DeFi right now is we're trying to predict what are the APYs, right? The average percentage yields, annual percentage yields. And so, but whatever it is, you're trying to forecast, right? And the common way that people use to do forecast is using like traditional indicators, right? So you guys, if you guys look at TradingView, they have all these, technical analysis indicators on there. And one of the really popular ones is relative strength index, or RSI. And that's what we show here on this graph. So this graph is the stars group, and you see the candlesticks bouncing up and down. And then down here, you see RSI. And, there's hundreds, if not thousands, of these kind of technical indicators. And people use this as a way to kind of predict what's going to happen. So you could see, like, in this case here, like the RSI kind of breaks a certain price, and that kind of keys off that the stock's going to go on a run, and then kind of goes on a run until it goes down to the lower part of the RSI. So this is a technique that a lot of traders use to make predictions about how the stock's going to move. And I would say early on, when I mean by early on, I mean like in the 70s and 80s, maybe probably just as many as 70s, 80s. This technical analysis was really good, and you could actually make some pretty good money about it. These days it's a lot tougher, and I'll go into why. So if you guys haven't checked out a website called Seeking Alpha, it's really great. It has a lot of good investment advice. But they talk about how augmented trading is dominating the stock market. So about 80% of the trades you see on the stock market are actually done by algorithms. It's not some sort of human saying buy or sell. And the result of that is a lot of the profitable trading strategies based on these really simple indicators like RSI have been eliminated decades ago, right? So, certainly if you just try to just do purely technical analysis now, you can maybe make money, but not for very long and usually not very much. It's actually pretty tough to just use pure technical indicators. And what I mean by these pure technical indicators are ones that are based off of like the close price of the stock. And the reason, and there's a couple of reasons why. Probably the biggest reason why is too many people are doing it, right? So pretty much everyone that pretty much any stock brokerage account has access to a lot of these basic technical analysis indicators. A lot of the augmented trading bots have these technical indicators already built into them, and so they could act a lot faster than any human. And so a lot of times they will front run the trades in terms of they'll trade before a human could look at the spreadsheet and look at the technical analysis and take action. But the second big issue with these simplistic indicators is that they don't have the capacity to complex more complex forecasting patterns. They're not able to be more predictive than what everyone else is doing. So there's not much of an edge that an individual is able to get. So that's the main problem with these kind of traditional indicators. And so the advantage of like traditional indicators is that they're relatively easy to calculate and understand, which is great. And this is why in the 70s and 80s a lot of people did this kind of work. But the big problem is that it's not able to factor in different information. So maybe on Wall Street Bets on Reddit, right, or maybe on Twitter, people are chattering about stuff, right? And these kind of traditional indicators aren't able to kind of factor that in. Even for like more complex patterns, right? The models, because they only have the capacity to handle really simple patterns, they're not able to pick up the more complex patterns that might happen during the movement of the security. And the last thing is they're just too popular. Just too many people using these traditional indicators, so it's just hard to get an edge. On the other hand, machine learning, until I would say the past 10 years has really taken off, but prior to that, because they're so computationally intensive and they're hard to implement, a lot of people it just wasn't being used that much. There have been some companies like like Renaissance, right, that have kind of pioneered this area, but there's even now relatively few institutions that use machine learning. It's kind of surprising but true. The big advantage of machine learning is that they have the ability to factor in lots of different information, and the way you have to think about forecasting is you have certain information, right? Input data. So it could be the close price of the stock. It could be, Wall Street Bets. It could be Twitter. It could be, the close price of another security. And what you're trying to do is you're trying to mine the predictive information of each of these input data. And that's what machine learning is doing, is helping you mine. It's trying to extract out this kind of predictive information out of each of these input signals. And generally they're able to do much better job than these traditional indicators, mainly because they're able to handle much more complex patterns and find them. Machine learning is also much more cutting edge. So again, relatively few people use it, and so it's a way for an individual trader to actually get an edge in trading. So what is machine learning? So I think the way to understand machine learning, and I'm looking at some of the comments on the chat in terms of people's experience. So let me kind of contrast it too, so you guys can understand. So with conventional programming, let's say, with Python, you take the data, the program, and then you get the result. So an example of this might be like a simple program might be if. So if A is greater than 0, print hello, right? As an example, right? So that's an example of like a program, like it's a very simple program, right? And then an input data would be A, right? So A would be a number, right? And so if A was 1, it would print hello. If A was 0, it would print nothing, right? That's a conventional program. This is actually more analogous to how the way we program computers is more analogous to like a brain surgeon opening someone's head up and programming their neurons, right? That doesn't happen very often. Machine learning is actually more closer to how we learn than there are some people that get brain surgery. Most people learn by getting examples. So the big difference between machine learning and conventional programming is that the program and the results are kind of flipped, right? So rather than in machine learning, rather than you putting in the program, it actually produces the program. So you put in the data, right? You put in what the result is, let's say hello, and then the program spits out if A is greater than 0, print hello, right? That's essentially what we're talking about. Not quite explicitly, but just trying to make it tangible. And the big advantage of this is that there's a lot of things like forecasting, like natural language processing, like computer vision, that it's really hard to explicitly tell the program how to do computer vision or how to do forecasting, right? You can't really program that in. It's very difficult. And so but instead present the results, right? Or what we call training data to the model. And then the model is able to figure out the weights of, let's say, a neural network. So it's able to produce the program. So these weights, these parameters of the model are essentially the program of the model, right? So the great thing about this is that in some ways it's very, very similar to the way you guys learn or humans learn, where you're presented a bunch of examples and then you learn from the examples, right? What the program is. So it's a much more powerful way. In some ways, it actually requires less programming because you're just feeding models and feeding data into models, and then the models are learning from that and know what to do based on the training data. Okay, so let's see. Any questions? If so, just let me know. This should be pretty straightforward, but this is essentially what machine learning is. So as I mentioned, example of a model. Okay, yeah, so I'll give you an example of a model. So good question. What is an example of a model? Probably one of the most basic models out there is you guys probably remember in like high school, in middle school algebra, right? Y equals mx plus b, right? Where m is the slope of a line and b is the y-intercept. And you may have had a bunch of points and you're trying to fit the line to the points. That's an example of a straight line model. It's very simple. This model only has two parameters. It has the slope plus the y-intercept. And then you're trying to figure out the line that intercepts as many points, right? This is something called linear regression, but it's a form of machine learning, although it's a very, very simple form. That's an example of a model. There's many fancier models like neural networks. There's transformer models. There's a whole bunch of other type of models, but probably the simplest model that pretty much everyone I would say that took algebra has used is like a model of a line, right? A line which is just there's a slope and then there's a y-intercept, and that's an example of a model. Good question. Thank you, Albert. Okay, so let me talk a little bit about my company. So Pika Group. So I'll just have if you guys want to check it out, it's here. And what we do is we do consulting to help people who are day traders and they want to automate their day trading using Python, so it's automatic. Oh, you don't see message. Oh, I'm posting my messages on the chat. I don't know if you guys see. Oh, let me see. You know, it should have. Oh, it's only host and panelists. I need to make it to everyone. Sorry. Okay, sorry, guys. Thank you, Ankit, for saying that. I had to switch it on Zoom to make sure that everyone sees it. Okay, good. So yeah, what my company does is we work with day traders, you know, either doing stock trading or crypto or futures or whatever it might be, and we automate it, right? We use machine learning to automate it. We host it for them on the cloud. We provide an interface around it, and I'll show you guys this later. And then we also provide the infrastructure to do back testing so that we could make sure that the strategy will actually make money. And then we also have all these safeguards in there that that prevent the model from going crazy in case of a mistake. And then we also provide kind of like a big library of machine learning models. So that's what our company does. And so I'll talk a little bit about some results. And first thing I want to say is that for Lumen Wealth and of course my company and for this presentation, we're not giving any investment advice. This is purely for education and information only. And this is no promise of results. But with that disclaimer in mind, let me talk a little bit about let me talk a little bit about the kind of results that people who have been using machine learning get. So so there's something called a Sharpe ratio. I don't know if maybe some of you guys may not know. So I'll talk a little bit about that. So what a Sharpe ratio is it's a measure of return over risk, and higher the Sharpe ratio, the better it is. And usually our Sharpe ratio over 1 is actually pretty good. So machine learning based investors usually get a lot better. Like ours has been getting around like 3.3, which is really damn good. This stands for average compounded annual growth rate. So or CAGR. So this is also really high return. And the reason why that you're able to do this is because they have more of an edge. They're able to build models that are more predictive as to what's going to happen. And so this is the motivation. This is why there's so many people interested in machine learning, especially machine learning for trading, is because of the results. So I'm going to give you guys a demo of this. So let me kick this off first because it takes a while to run, and then we'll come back to the results later. So let me open up another screen here. Okay. Sorry, I need to move it down here so you guys can see it. Okay, so so this is our service. So we have it in Google Cloud, and we have all of the different training algorithms hosted on here. So I'm just going to give a demo of one of them, just to give you guys a feel about what we're talking about here. Then I'll go into the depth of the coding for it, and then later, after I finish running, show you the results. So we support a wide variety of brokerage firms. So we're just going to select Alpha for now. Alpaca for now. Alpaca, if you guys don't know, is a really nice. They provide really nice APIs for doing algorithmic trading, both for crypto as well as for stocks. We're going to do a back test because right now the market is closed. We're not going to do the bid-ask spread, although you want to do that once you have the model in really good shape. You want to do bid-ask spreads because it will be more accurate. And so we're not going to put that in there for now. And then we're going to not do any retraining. We're going to, I'm just gonna pick a date here, 10, 21, 21. Let's do it when the market opens. And then 15. So we're going to start trading at 9:30 and we'll finish at 4 o'clock. Okay, we'll start with $10,000. And then we have a whole slew of different type of strategies. These are some of the default ones. We have like a reinforcement learning one. We have pair trading, reinforcement learning. We're just going to do a simple one for now, and I'll show you guys the code for this later. And so we're going to have this. If let's say the stock prediction is more than let's say 0.3 more. Let's say the forecast is 0.3 more than the current, then we're going to buy. And if it's less than 0.3, then we're going to sell, right? And then we're just going to pick the first one, which is Agilent. And then we're going to trade 10 stocks. And then we're not going to have a max position, and we'll sell any leftover stocks. Okay. And then, again, we have lots of different type of models. In this case, we're just going to use random forest rolling, and we're going to time scale of minutes, and then we're going to forecast 15 minutes in the future, and then trade every 15 minutes. Okay, good. So I just kicked off the job, and then I'll come back to it later and show you guys the results. Okay, so let me jump back to the slides. Okay, so I just showed you. Oh, actually, there's a question from Wen Q. Do you teach reinforcement learning for trading, i.e., train a trading agent based on historical price volume of a stock or cryptocurrency? So, we in this course, what you guys are basically going to be doing is you're going to be building a forecaster for whatever security you might be trying to trade. So it might be a stock, it might be a cryptocurrency, it might be, whatever. And so by the end of the final course, you have, this is the final project would be, you have this forecaster, and it's hooked up to LumaBot, which is an open source bot that you can use for trading. And hopefully you guys could deploy it and make some money with it. So that's what the course is about, and I'll talk more details about it. We talked a little bit about reinforcement learning, but we don't go into too much detail on it during the course, mainly because reinforcement learning is really largely used for like games, right? Where you could like have a Go play against another Go model, right? Or like AlphaGo play against AlphaGo, something like that. Or like this is used a lot for games or for things which are symmetric, where they could play each other. For stocks, it's hard to do that. It's not really set up for reinforcement learning. But we're reinforcement learning. We do have like my company. We do have reinforcement learning models. Those are really used for like thinly traded stocks. So when the number of people trading on a stock are relatively low, like when those like small caps or lightly traded stocks, it becomes more of a reinforcement learning problem, because then you're playing against other individuals. But when there's a large number of people, like let's say you're trading Tesla, there's a lot of people trading it. It's better to treat it as a forecasting problem versus a reinforcement learning. So, but good question, Wen Q. And just to be clear, when reinforcement learning is one of the variants of machine learning. So there's like supervised learning, which is largely what we're doing. There's unsupervised learning, which we'll do a little bit with. There's a reinforcement learning, which is basically the idea of having the model generate its own data. But yeah, good question. So Enkin asked the question of 2021 in the past. Yeah, so I can't show live trading right now because the market is closed. So I just picked some time in the past. And then another one is, so we learn ML concepts as well from beginning, or just how to use the current concept towards trading. So this course is a very practical course. We're not focused as much on ML theory, machine learning theory. There's a lot of other things if you guys want to learn about, the theory behind machine learning. We talked a little bit about it, but what we try to do is we try to stay focused on what do you need to know, what tools you need to know, what knowledge you need to have to be able to implement a forecaster for your security. That's what we're focused on. So we don't focus as much on, like how does gradient descent, stochastic gradient descent work? because for the most part, that's a library call, and most people don't need to know that to get something working. There's a lot of libraries that do that already. But good question. Okay, if anyone has any other questions, just feel free to ask it, and I'll try to answer it as it goes along. Okay, so yeah, so we're going to be using Alpaca. I'll show you some of the code for this. We've been using Python 3, which is Python by far, for those of you that don't know, programming is pretty much the language that people use for machine learning. We use pandas. Pandas is kind of like a spreadsheet for or Excel for pandas, in that you can manipulate data using very simple Python calls and manipulate the data. So pandas are actually very, very useful because it allows you to get the data into the right format. We're going to be using a library called TA, which is a technical analysis library, Python library that has hundreds of functions in there. Scikit-learn is kind of like the granddaddy of these machine learning libraries. So we're going to be using a random forest model, like what I just showed you for the job I just kicked off. We're using Google Colab. Google Colab, if you guys don't know, is a really great free tool, and especially if you don't know how to program, is one of the best ways to learn how to program, because it's what they call interactive Python or Python notebook. So you can interactively learn, like you type 2 + 2 and see what happens, right? And then we're going to use Google Cloud. So Google Cloud has probably one of the strongest AI or machine learning tool set. So we're going to use that. And then we're going to use Google Natural Language Processing to do some NLP. So we could process some text and try to find better signals for our forecasting. Okay, so let me get into the code. As I get into the code, you'll see that there's a setup. Okay, and this is the bulk of the work typically in machine learning, is getting the data, the training data, in right format. So we're going to be interfacing with Alpaca. So I'll show you how to do that. We're going to be scripting FinViz, which I'll show you guys what that site looks like. It's also another really great financial site. And then let me show you FinViz first, so you guys could see what that looks like. Okay, so this is FinViz. So they have a lot of stuff, a lot of financial visualizations. They have a lot of information on stocks, and also like headlines for that particular stock. So if you want to see, like, let's say this one here, you can see what the price movement looks like, and then you have just a bunch of news data for that stock, right? Just every hour or so, right? So very, very informative. Okay. So next step is train the model. And train the model is actually just a few lines of Python, so it's not that hard. The hard part actually is getting the data in the right format. And then once you have the model trained, you can generate predictions, and then you can analyze the results. So let me show you guys what that looks like. Okay, so I have Colab here. And so the first part here is just importing the dependencies, right? So you have to install some of the packages that aren't built in Colab already, and then so you can see some of the libraries that I talked about. And then we also using Google Cloud, so we have to authenticate to Google Cloud, and so that's what this line does. It authenticates, and then in general, because we're dealing with financial information, we don't want to put our secrets, like the API key and stuff like that, in our code. So I like to use Secret Manager. So it encrypts it on Google Cloud, so that in case you, let's say, check in your code into GitHub, people don't have the secrets to your trading account. So this basically just gets the secrets from the Secret Manager, and then once we do that, then we get the everything set up to activate the API to Alpaca. So this is just a few more dependencies. So what we're going to be doing here is we're going to be scraping FinViz and then running it through Google Cloud. And so this is the information that we need to activate our service with Google Cloud. And so we get that activated. And this call here just initializes the language model so that we could start interfacing to it. And then this function here is going to basically be taking content and then coming up with a sentiment score. So it runs NLP on it. So this is using Google Cloud. It's running NLP on it to see whether it's positive or negative sentiment. And then what we're doing down here is using a tool called Beautiful Soup plus request. So Beautiful Soup allows you to scrape basic web pages, and then request allows you to kind of automate actions in there, right? Like clicking on stuff or scrolling, stuff like that. So I'm going to basically scrape Agilent. So this is the code. This is an example of the code that I just ran, or I kicked off. I'll show you guys the results after it finishes running. But let me walk through the rest of this. So here we have the Dependencies website, and then we're basically using request and Beautiful Soup to essentially start scraping information from Dependencies. So back to what that looks like more tangibly here. So what we basically did in the code is we went to the site and then we searched for like Agilent as an example. And then what we're doing here is there's all this news data on Agilent. We're just basically scraping it. Okay, so we scrape all that and it creates a nice data frame of all of the, actually I think it's just an array of all of the articles. And then what we do after that is we start iterating through it, right? We iterate through it and kind of get the data prepped. And then we essentially call our analyze sentiment, right? To analyze the sentiment of each of the articles, right? To see what the sentiment is like. So you can see some of the headlines that we scraped, and then you can see down here some of the scores. So like if it's kind of negative, then you can see that it's like a negative score, and if it's positive, it's kind of a positive score, and if it's neutral, then it's kind of like a 0. And so what we're going to do is now that we used NLP to scrape the headlines and then use NLP to score it, we can use this as a feature. So so right now what we're doing is we're going to start building up our training data. So down here we have a function that will get data from Alpaca and put into a data frame. Alpaca, you have to do a little bit of retries. This has also some retry logic in it. And then down here, what we're doing is we're setting up the data frame to present to the machine learning model so that it could use it to make predictions. So we're giving it a lot of what we call features. So each of these things here you see is a feature, like what is the time of day, what is the Unix time, what is the delta, what is the RSI, what is the sentiment. So this is from the NLP processing that we did earlier. So we have all these different features, and then we get the data prepped, and then we now have our training data. And so this is an example of just for a few columns of data what it looks like, right? So the close price, which is the target variable, and then we have some of these features. And then we do the same process again for the test data, except we do it for later, right? We do it from March onward. The training data was for March before, like before March 1st. Okay, so after we have our test and train date, now what we're doing is we're going to do some forecasting. So what we're going to be doing here is we're going to be doing this on a rolling basis. So the way you think about a rolling basis is we're keeping the forecast distance. In this case, we're calling it window size 15, right? So 15 time periods, right? And so essentially like 15 minutes in the future. And what we're doing is we're sliding the window over. It's like rolling as it's going forward. So it's always 15 minutes in the future, but essentially every minute. And that's what we're doing here. So we're doing the training, and then we do the prediction, and then we pin the data here. So we have this kind of like rolling prediction that's happening. And that's important because you don't have what's called an expanding window where the forecast distance gets further out, because further you go out to forecast, the worse it gets. Okay, so now we look at the output of our prediction, and so you can see that it got pretty close, right? So you can see that for the different days, these long straight lines are because the market closes. Actually, what's interesting is when you look at crypto, because it runs all the time, it doesn't have these lines, right? These flat lines, because it's open all the time, which is kind of cool. And then, but you could see for the non-flat line part, the parts that was actually traded, you can see the model actually did a fairly decent job in terms of predicting. It's almost right on top of the actuals. Okay, and then the neat thing about random forest models is that they can tell you the feature importance, which feature was most important. So as you can see, RSI was a pretty important feature, and that's why a lot of people use RSI when they do trading. Okay, so when we look at the scoring, it's good the scoring, the score that you use for your model is really important because that dictates, that's what they call the loss function. It dictates what the model is trying to optimize for. So in this case, we're using MSE, or mean squared error, also percentage error. And so we could see the scores down here. And so, not bad, right? Relatively low error, like 0.25%, so not bad. Okay, now let's move on. So let's do the same thing this time, but let's not have the sentiment score. So we'll see, what was the before and after of adding the sentiment NLP and not having the sentiment score. And we'll see which one's performing better. So it's very similar code, except we're just dropping the sentiment as a feature. Everything else will remain the same. Okay, so we're going to do some evaluation using ANOVA, which is just a way to kind of compare and see. And so in general, when you have a really, really low p-value, right, it means that the performance of having the sentiment versus not having sentiment is actually significant. So so as you can see here, because the p-value is so small, having the NLP really did help the model. And that's not surprising, right? Because if a bunch of people are chattering, or a bunch of negative news comes out in the stock, obviously it's going to go down, right? So that's not too surprising. But the really neat thing about using machine learning for this is that it can do it automatically, and you can look at a lot more news much faster than any human can, right? So that's a big advantage with that. Anton had a good comment here, which is run the same test on crypto. Yeah, we could do the same thing on crypto. Although crypto, yeah, there's a lot of chatter on crypto as well. There's a lot of Discord channels, there's a lot of Twitter, Wall Street bets. So certainly something similar we've done for crypto. Good point, Anton. Okay, let's see. Okay, so we kind of walked through all of this. Let me check up here to see if this finished running. Looks like it has just a little bit more to go. So let me see here. Yeah, it's not done yet. Okay, so so let me talk about some of the code that that we use to trade. So I just showed you the forecasting part. Let me show you what we call the trigger. So there's for the augmented trading with machine learning, there's two parts. There's the forecast part where you're trying to forecast the security price, and then the second part is the actual trading. And so this is what you do for the trading. So this is example Python code here. So basically, if the close price is less than the predicted times some sort of threshold, so let's say 10%, right? So that means if it's 10% lower, then the prediction is, if the close price is lower than the predicted price, then you want to buy. And that's what this means here, right? It's like the stock equals amount, so it's a positive amount. If the close price is going to be, the close price is higher than predicted, that means the stock's going to fall, then you want to do just the opposite. But if it's in between the plus or minus 10% of the, let's say, of the closes with the plus or minus of the predicted, then you don't want to do anything. You just it's kind of a push. Okay, it just finished here. So let me show you some results here. Okay, so we started with 10K, and then we ran it through a random forest rolling model, and so fairly decent CAGRs, 28%. Good Sharpe ratio of 4. Again, anything over 1 is good. Made $35 profit, which is not bad. This just ran for just a little bit. So this gives you a quick example of like what's possible and why people use machine learning. I just seen a question down here from Albert. Is feeding my coded trading strategy in considered a model? What a model is basically it's some way to predict what the price is going to be, and there's models you can make manually, and there's models you could use machine learning for. Traditionally, a lot of people did it manually, but it's very limited because you can only look at so much data. And the advantage of doing it automatically is you can look at much higher volumes of data, much faster, so you can do more frequently. You can do more frequent trades. So a model doesn't have to just be a machine learning model. It could also be a human generated model. But good question, Albert. Okay, so this demo I showed you is not going to show it's not a promising trading routine, but it shows off capability and why people do this. And of course, we could go into a lot more detail about machine learning, what the basics are. We're going to get into deep learning. We're going to build a stock forecasting model, and then the forecast demo. We used a lot of common features, right, like RSI, Bollinger Bands, etc. Use random forest model, and then we just forecast 15 minutes future. Now I'm going to show you another demo. So I kind of showed you it on our website, but let's say if you want to do it on your own, Lumen Wealth actually provides some GitHub repos that you guys could go to and use some of their code, right, free of cost, which is great. So I'm going to show you, let's say one where if let's say you didn't want to necessarily host this on Google Cloud, you can host it on your own local machine. Although I don't necessarily recommend that because if you have a bad internet connection or the power goes out, it could be a lot of trouble when you're in the middle of a trading session. So I'm going to show you what we did here in the Google Cloud, and then what the final project will look like. So let me bring this up and show you guys. Okay, so let me just kind of hide some of the stuff so it's a little bit easier. So there are several parts to this. One part is the credentials. Another part of it is to download the data. And this script will download data into this directory here. Actually, my cloud timed out, so I might have to refresh this. But okay, let's when you ask which ML models will be covered in the course, will you go into details of how to tune the models, or will we be using box package solutions? So we're going to be covering both supervised and unsupervised learning. We're going to be using NLP models. In terms of specific models, we're going to be using a lot of the modern packages out there, like for instance, like AutoTS. We're going to be using some Google Cloud forecasting. We're going to be using a whole variety of them. We're not going to teach you how to write a model from scratch, because there really does no need to. There's so many great ML packages out there, so you simply just don't need to do that these days. and then but we'll teach you how to tune the hyperparameters and how to debug the models and how to get the data, how to do the data prep properly so that you can actually use the models effectively. And so that's generally what you want to do these days. You know, maybe 5-10 years ago, you'd have to code up your own neural network. But there's really no point of doing that these days because there's so many great libraries. Anyways, so the data is in this directory. I might have to refresh this. Okay, Albert just asked, actually, let me just refresh this in the meantime because it timed out and then I have to refresh it. Okay, it takes a little bit for it to do that. So let me answer a few questions as we wait. Let me get this started first. Okay, it's opening now, so I'll show you guys. Let me answer a few questions as this thing connects and whatnot. Okay, let's see. Albert asked, how can I use ML to make my trading strategy better? So I think the big advantage of ML is that you're able to use a lot more informative features, and so you're able to predict better. So prediction is the core of trading. So if you're able to predict better, you can trade better. So that's why. And then Jeffrey asked, I can't follow what is going on. What websites or resources do you have for complete beginners? Yeah, I'm realizing I'm going really fast. I'm squeezing in kind of like a in 1 hour what I typically teach over 8 weeks. So yeah, I know I'm going super fast. During the course, we actually go through a lot slower, and then there's homework and whatnot. So and then we also have office hours. So but there's a lot of great YouTube videos on Python programming, on machine learning. So you can also reference some of those. Then Albert asked, if so, let's see, if so, when I combine my trading strategy with a model and sentiment data. Well, I mean, so when you're building a forecast model, you want the model as accurate as possible. So you want to be able to use lots of different data sources. And so the point of using NLP is that you can now use kind of human-oriented data sources to improve the model. Because a lot of times people for models only use numeric data, right? But that's very limiting because there's only so much information in numeric data. There's a lot of information in like text data that you could process with NLP. And then Anton asked, so far I saw that you manually added a stock to trade monitor. Would the bot be able to do research of stock on its own? Yeah. So actually, on our site, Pika Group, we actually have stock screeners where people would say, I want to find all the stocks that work well with this trading strategy, and then we would run the stock screen across all of those. Those tend to be very, very compute intensive, so you don't want to do that as lightly because there's like it sucks up a lot of compute time and could be kind of expensive. But yes, it's definitely possible. And so that the bots would tell you, oh, for these stocks, it works well with your trading strategy. And then Albert asked, do I need to know how to program to do this? Not necessarily. I mean, the nice thing about machine learning is there's actually a lot less programming than there is with regular programming, but you have to know how to manipulate data. So you can use like Google Data Prep to do this. So you could use also Microsoft Azure. Azure is also I've used all three. I used AWS, Azure, and Google Cloud. All of them are good. I would say AWS has probably the biggest ecosystem. Like most people know how to use it. They're probably the most popular. They're a little bit expensive. I would say Azure. I think they do a really high quality job. I mean, in terms of their implementation, so good documentation, relatively few bugs. A bit less expensive than Amazon, and Google Cloud I like because they're really strong in AI. So they have lots of AI capabilities that some of the other guys don't have. But good question, Albert. Okay, so back to so the end of the course, I showed you guys the forecaster, right? How to forecast security. I showed you the code of how would you use the forecast and either buy or sell. And then this is showing you LumaBot. So this is I showed you the machine learning model implemented in our system on Pico Group. But if you don't want to use Pico Group, you could also do it yourself by using from GitHub, the LumaWealth GitHub, this code as a starting point. So so the download price data of Alpaca, I'll bring this up so you guys can see. Basically, what this does is this goes to Alpaca and downloads a bunch of historical pricing information, and then dumps it into this directory. So you can see for SRNE, kind of like what was the price of the open close volume of the stock at every few minutes. Okay, and then there's the main. What the main here has is what is the security you're trying to trade, what time period. So it's kind of the setup of it, and then down here it has the actual execution of that trading strategy. Where you would actually implement your machine learning model is in this file right here. So here you have your like what model you're using, how did you get the data, how did you format your training data, you're doing a prediction here, and then you actually have the trading here. So if the price is predicted to be higher, buy; if it's predicted to be lower, sell, right? So so that's what the code looks like. And then let me show you some output examples. So this will output log files, or actually, let's see, can we run the bot from our own workstation server connected to Alpaca rather than run the bot from the cloud service? Yes, absolutely. So you don't have to run a Google Cloud platform. I just did that as an example, but you could run this yourself on your own machine, your own laptop or server. And I think that's okay for backtesting. I think for live trading, it's a little bit dangerous. I would strongly suggest running it in the cloud or using a service like ours where we can do it for you. But good question, wouldn't you? Okay, so this is the ML strategy. I talked a little bit about how to, the data prep that's needed to get the data into the right format, and then what it does. And then here are some of the results. So it generates, download this. Actually, I already have it downloaded. Let me show you what it looks like. Yeah, so when you run it, it shows you, what the prediction was when it buys and sells. So it has some nice visuals here. It also has log files, so you can see what it did, and then you also see the trades, and then you also see the stats. So it's a nice kind of little freebie if you're interested in getting started with machine learning and algorithmic trading. Okay, good. And then yeah, so that's kind of like the goal is for you guys to have your model in LumaBot by the end of the course. So you guys actually have something that's tangible. Okay, so let's talk about the machine learning course now. So let me show you what the website looks like. Oh, okay. Samuel asked, seems to be applicable to securities trading. Would it also be applicable to commodities? The answer is yes. It's pretty much applicable to any securities. Basically, anytime you want to forecast, it could be forex, it could be crypto, it could be stocks, it could be options, it could be anytime you're trying to make a prediction, you're placing a bet on one side, and you want to see if that bet is going to be correct or not. So you want to have an accurate forecast. Good question, Samuel. Okay, so this is the Limo Wealth website. So I'm the instructor for the machine learning course, and so there's a self-directed plan, which is the most affordable. So you could basically look at our videos, look at the sample code, and kind of work at your own pace. We have the last live class plan, which is really nice because Robert likes to keep these classes relatively small, so you get a lot of individual attention. We also have office hours. You're also able to collaborate with other students. A lot of students partner up on homeworks and projects together, and then there's homeworks, and I will also review the homeworks if you guys are interested in that. And then we have more like if you need really in-depth help. There's like tutoring plans, and there's consulting that we can also do. So this is the price of the different courses. So so this is kind of like the self-directed course. I think the most popular one is actually the live class, and then there's one where there's like some additional hands-on help that we'll do. Okay, so in the course we'll talk about what is machine learning. Kind of the objective of the course is to really make sure that you guys know how to use machine learning to forecast. And again, we focus less on variance. We focus really on trying to be popular. What's practical. So I'm trying to also read some of the comments. So Ruslan asks, I don't quite know the question, Ruslan. With self-directed plan and support. I'm not sure what the question was, but let me flip back to it. Maybe I'll see. With self-directed plans and support. Oh, does support come with that plan? So there's access to the Discord and the Limo Wealth community. There's not necessarily one-on-one like help like there would be with machine learning class and live interaction like we're doing now. But it's nice in that you get access to most of it, and it's at a much lower price. Okay, Albert asks, please talk more about your DeFi crypto ML. Sure. So I don't know how many of you guys actually are into crypto, but there's probably about a year and a half ago or so, there's this whole area called decentralized finance, which is basically the idea is everything that's essentially financed, like B of A or Charles Schwab, starts becoming decentralized, where you have all these independent what they call DEXs providing liquidity in the market. And what's happened is that there's all these liquidity farms or pools where you can trade your cryptocurrencies, and the yields change all the time. They change like literally every minute, and the prices of these tokens go up and down all the time. So it's a little bit like you're having to figure out where you want to put or stake put your tokens, right, to have the most amount of yield and least amount of risk. And so what we've been doing is work around forecasting where's the APY is going to be, where the price of the token is going to be, and how do you minimize the amount of risk. So that's something that is actually quite interesting, because the yields of for those of you guys that aren't in DeFi, the yields of some of these things can be tremendous. It could be some of these have like 80,000% yield, like these ridiculously high yields, but there's a lot of risk because the underlying token can vary a lot. And also yields tend to go down as more and more people stake their tokens into that pool. So it's a definitely do your own research type of situation, but it's an era of you go to Charles Schwab or B of A, you get like 0.1%, 0.2% interest, and inflation's at like at least 7%, if not higher. The crypto area is really interesting because it has so much going on right now. Okay, so back to this. so there's 8 weeks. We have it broken up into 3 sections. So the first section is um, is kind of getting oriented, figuring out the setup of everything. Students start kind of budding up here. We have all the Q&A stuff. Then we get into week 2, the basics. And each week we're slowly building the project, right? So we talk about what is machine learning, why we use it. We talk about some of the really basic models, the training process. You kind of get the basics of machine learning. And then we dive into deep learning. So what is deep learning, which is how you get really, really powerful models. And then we talk about when do you want to use deep learning versus just using regular models, and what is it, and when does it make sense? And then how do you train and validate deep learning models, which is actually different from like these shallow learning models up here. And then we talk about how to optimize models. So we talk about using Google AutoML, which is a very powerful system. We talk about the Google AI platform, which they call Vertex, as well as experiment sheets. So you kind of know the practical tools of how to actually build a really good forecaster. Okay, so the first part of the project is we get into what is time series versus non-time series, the theory, the training validation process, which is actually different from non-time series. And then we build up our first version of the stock forecasting model. So we figure out how to set up, what is the error, what is the setup of it. And then the final part of it is feeding additional features or data sources. So like, pulling stuff in from Finviz or Reddit or Twitter, right? And then processing with Google Natural Language. And then hooking all that up into Lumabot. So these are the 3 parts. And so you walk out of the class with basically a working forecaster and trader trading bot. We have class coming up. I guess in about about a week now, on the 13th, and registration actually closes today. I know that Robert usually has a very low limit in terms of how many people he has, because he wants to keep it pretty interactive. So if you guys aren't able to make it in this one, we have these like pretty much every quarter. So, but hopefully you guys are able to get in here. I don't know the current capacity, but maybe Robert could talk about that. Yeah, okay, and a little bit more about me. So you're welcome to look more at the Lumumba website. I'll put the link into the chat here. And then let me go back to the slides here. Okay, so I think we are done. I think I covered all the topics that I want to cover. So just wanted to see if there's additional questions for anything that I did not cover so far in this webinar. And everyone's been doing really great about keeping it interactive, asking questions. Link for the Discord, yes, let me do that. Yeah, if you have more questions, you can email me at glt@pika.group, or you can also email Robert, either way. Does anyone else have any other questions? Just feel free to put it in the chat or the Q&A part. I have both of them open. Oh, the Lumabot, I think Lumabot is, Robert, correct me if I'm wrong, but I think it's already on GitHub, correct?
Yeah, Lumibot is on GitHub. It's open source. So if you want to use it, you're more than welcome to use it. We obviously teach you how to be very good at it, but yeah, it's open source. So yeah.
Great question. Discord link with invalid invite.
You search for Lumibot GitHub. It's like the first thing on Google. Sounds great, Samuel. Thank you for that.
So here, I'll put the GitHub link in here for you guys.
Yeah, there we go. There you go. Yeah, our documentation we're working on quite a bit. We're working on also right now for those of you that care. We're working on a website to make this very simple, right? So we're gonna have a bunch of different bots on a website, and you're gonna be able to just use those bots and invest in them pretty easily. So we're working on that sort of thing.
Yeah. So I someone said they were having trouble with the invalid Discord invite. It should work. This is the link I put in the Discord, I mean the Zoom chat, so it should work. Maybe you might need to log into your own Discord first and then do it, but it should work. And then let's see. Ruslan asked, "Is it legal to trade with bot?" Absolutely. So there's a lot of people that trade with bot. That is, 80% of the volume is actually bots. So good question. Definitely legal. Tyler asked, "How many stocks are there to monitor, and can one machine do them all overnight?" Well, it really depends on what you're doing, right? If you're using like a very simple model, like a random forest model, and you're scanning, 100 stocks, probably no problem, right? If you're doing like reinforcement learning and it's a gigantic net, and you're doing 1,000 stocks, yeah, that can be pretty taxing, and that's when you want to use the cloud so you can run more machines at once. Samuel asked, how important is TensorFlow to this process? So TensorFlow, if you guys don't know, it's a great neural network library that's accelerated on GPUs from Google, and it's probably one of the most popular neural network packages out there. So a lot of the tools we use actually is based on top of TensorFlow, but they're a lot easier to use and a lot more accessible. But yeah, TensorFlow and PyTorch are like the two most popular packages out there. Good question, Samuel. Any other questions? Just feel free to type them in or put them into Q&A. I know we are going a little bit long, but we have a lot of great interaction today.
It's fantastic. Honestly, Greg, this is a great presentation. Thank you for this.
Thank you, Robert. And great questions from everyone.
Lots of crypto questions, which makes a lot of sense.
Yeah, actually, crypto has had a bit of a nosedive lately, so it's
only temporary.
Only temporary, but that for me, I rarely buy crypto like just straight long. I typically this is why I like DeFi, because you could do like delta neutral strategies where you're essentially earning interest and you're basically canceling out the effect of the actual token. So you get the relatively high.
So if Bitcoin goes up, Bitcoin goes down, we don't care.
Yeah, you get interest off of the Bitcoin that you're staking.
How do you do that? How do you do that, Greg?
There's a lot of decentralized finance exchanges out there, but basically a lot of them allow you to borrow. Okay, so you could basically, let's say you're going to do Bitcoin, right? So you use a Bitcoin plus a let's say USDC, right, which is a stable coin, and then you basically stake your cryptocurrency in there, right? So Bitcoin plus USDC into this pool, and this pool pays your interest. Right. But what you could also do is you could actually take a loan out on the Bitcoins, right? So let's say you don't
actually own them. Right?
What would you say?
So you don't actually own them. So if the Bitcoin goes down, your loan also goes down, right?
Yeah. So what happens is like, so what you do is you have Bitcoin, you're long Bitcoin, but you also short it at the same time, so they cancel out, right? And then so you own, let's say you own like 0.5 Bitcoin, right? Which is actually a lot of money, $30,000, right? So 0.5 Bitcoin, you have 0.5 Bitcoin, and then you short 0.5 Bitcoin, so they essentially cancel out. So it's kind of neutral, and then you earn interest on both of those, right? So you get leverage, right? So you get extra interest, right? Or staking returns, right? Or trading returns. So, but that's how. And there's also if you guys don't know, there's one called Anchor Protocol, which is really cool. You get like 20% interest on like on a stable coin, which is actually quite interesting. So there's a lot of really interesting strategies you could do.
Greg,
but
Greg, I feel like we need you teaching a crypto class.
well, maybe it's definitely a very interesting area. One thing I really like about it is because it's not highly regulated. Like with traditional finance, it's super highly regulated. So so there's not much financial innovation, right? It's kind of very limited, right, in terms of what you could do. But because in the whole DeFi area, the whole crypto space, this stuff is lightly regulated right now. The amount of financial innovation is tremendous. So you see products that you just don't see in the traditional world. Like you have flash loans, right? You could actually with no collateral, you could take advantage of a arbitrage opportunity. Like you could take a loan for $1 million and not have $1 million worth of collateral, as long as you pay it back within that contract.
How are you gonna borrow $1 million, Greg? How would you do this?
You can use flash loans. In fact, so hackers have used flash loans to affect what's called price oracles, which basically affects the pricing of these crypto pools, and they can try to drain money out of these pools. So there's a lot of this fraught with a lot of hackers and danger. So it's not easy to do, but there's a lot of opportunity as a result, because it's kind of like the Wild West. Actually, Tyler has a question here, which is, what is the most popular strategy you've enjoyed so far in a single day return? Well, one thing about trading is it's all about risk management. So you could get incredibly profitable strategies, but it's how much risk are you willing to take, right? You could I forgot the name of the site, but there's a site where you literally bet is Bitcoin go up or down in the next 5 minutes, right? So you could do stuff like that, but it's like, how much risk do you want to bear? So you could have, I mean, I'll tell you a story. When I first graduated college, I did a ton of option trading. Like there's a lot of option trading, and I did extremely well. In fact, I was making like 4x what I was making working. So I was thinking, I'm going to quit my job and just do option trading. But it's easy come, easy go. While I was making a killing for a while, I also made like just a loss. I also lost a ton of money. So this is why people use a Sharpe ratio, because it's a matter of, it's not just how much money do you make, it's that how much do you put at risk, right? What is the volatility? So that's also matters, right? It's not just, you can't just look at it in terms of how much you get in a single day, because you could get like 1,000% return, right, in a single day, but at what risk are you taking, right? So then another question from Muslin is, in your example, you show a time frame of 15 minutes. Is it possible to use a different time period, like a day, week? Yeah, you can. But with machine learning, you typically want to have very short-term time frames. And the reason why is because if you do like a 10-year time frame, like Warren Buffett buys Coca-Cola and holds it for a decade, right? That is not a good machine learning strategy. It's not a really good strategy for machine learning. And the reason why is because machine learning tends to do better than humans when there's lots of data, and it tends to do poorly when there's relatively little data. So when you have like a 10-year horizon, like a Warren Buffett like thing, there's not a lot of 10 years from now. It's hard to predict 10 years from now. That's like this. You have only like a relatively low amount of data to make a 10-year prediction, right? There's not a lot of training data, right? To have training data for 10 years, you can only go back so far. There's only, like, I think the stock market only started existing, in the US, like for 100+ years, right? So if the 10-year horizon, you only have like 10. You have a limited amount of training data, right? So it's hard to have a really accurate machine learning model. But if you're predicting 15 minutes in the future, there's a lot of training data, right? And that's why machine learning tends to be better for short periods of time, or short forecast distances, is because there's a lot more training data. And if you have more training data, you have more fancier models that are more accurate. So that's why most machine learning strategies or strategies that use machine learning tend to be very short term, because there's a lot more training data available than there is for long-term forecasts. And then Min asked a question of how much programming experience does one need to have to understand the course material? we try to make this very accessible, so you don't have to be a super expert. And we're using Python, which is one of the easiest languages to know. You have to invest probably a lot more time into doing this than, let's say, someone that knows programming already. But it's definitely we try to make it accessible to a wide range of people. Good question, man. Okay, any other questions? I know we're going very much over time, but we've had a lot of good discussion here. So thank you guys for keeping it interactive.
Greg, this is fantastic. Honestly, one of the best webinars we've had for a while.
Definitely.
Definitely very good time. I feel like a lot of the questions around crypto, you know, you know what, we met a little over a year ago, something like that. Your knowledge of crypto is quite advanced, especially for something that's brand new. Not only do I think that people that take your course would learn a lot about machine learning for crypto specifically. I think there's a lot of value in that. I think maybe we could even expand that out as well. Maybe we could grow out your crypto knowledge and grow out the different types of courses and things that you can offer. Because clearly there's a lot of demand for that, and I agree, right? Like, I mean, why? Like, that makes perfect sense, right? Then, like, I know we're looking at this S&P 500 did very well over the past year. It's up 25%. Dogecoin is up like 80,000%.
You look at like Bitcoin, it's crazy.
Not even the same atmosphere. It's like
I actually, Robert, I don't know if I told you, but one of the students in the last course, he focused his project on binary options, for Bitcoin. So basically predicting is Bitcoin going to go up or down.
That's a game. I think you're talking about a game.
Yeah, that's right. Yeah. So the point of this course though is by the end time you finish, you have a project that you actually use to do some trading, because you need that motivation to actually finish it, right? And so it doesn't really matter which one you pick, but pick something that you actually want to trade. And so this course basically helps you get this trading bot ready to roll by the time you finish the course. That's objective.
I love ML. The kind of things that are possible. I know we've spoken in the past. You're a big fan of machine learning for text as a big part of the course.
It's just because a lot of the models that just use pure numeric data, it's kind of like overplayed, and so it's hard to get an edge. There's just too many people doing that already. So to get that extra edge, NLP is huge because there's so much. If you think about what's going on, at the end, it's a human making a decision, right? Maybe a bot doing it, but at the end, the humans make a decision about what to buy and sell. And we live in a world where things are written down, right? There's podcasts, there's Twitter, there's Twitter Spaces, there's all this kind of stuff. And so you have to those signals definitely contain information about like what I've been doing today was I've been jumping into a bunch of Twitter Spaces because I'm looking at like, oh wow, all this crypto's down. It's a good time to buy maybe, right? I usually don't just go long crypto, but I've been thinking about it because the price has been going down. Like, oh, maybe it's a good time now, right? Or been thinking about how to adjust. So I wanted to understand the sentiment. So I've been jumping into a bunch of Twitter Spaces today, just kind of listening to chatter about what people are saying, right? And so those are really great predictive signals for a model, right? And traditionally, if you only took in numeric data, you couldn't do that. But now you could take a speech to text and then the text to NLP and use that as a trading signal, right?
Absolutely. I mean, I feel like for crypto, you can use something like Telegram channels.
Oh yeah, Telegram,
right?
Discord
channels, right?
Yeah.
Like someone's tweeting like, I think this is a great coin. I mean, even if they're like, it's like a pump and dump thing, you could even be faster than that.
Yes. Well, that's yeah. Cool. I mean, some of our clients for Pika, that's what they did. They had us do bots where we watch Discord channels or Reddit, and then because the computer is way faster than any human, just trade faster than other people could do it, right? You could place a trade way faster than any person could move a mouse, right?
I had a conversation very recently, and this is very, very relevant, right? The Federal Reserve recently, they put out minutes saying that they think interest rates are going to go up and that sort of thing, that they're going to do that. And the market basically crashed after that. right? If you had a machine learning bot that could read that and say, hey, they think interest rates are going up, what are the implications of that?
Yeah. Yeah,
Right? Like you would have been way ahead. Right?
You
You
can watch a
wouldn't
live stream about that. Yeah, you can watch a live stream because by the time the other news sources and like that information kind of disseminates, it's like that's time, right? So you could
right?
directly just and this is a whole
So
advantage of
obvious.
bots.
It's so obvious. Like, I mean, if you had honestly a 10-minute advantage,
Yeah.
seriously,
Well,
10
you
minutes,
probably don't have 10 minutes. You probably have like a minute advantage. So, but that's enough. That's enough
enough
for
to make money.
a bot to do a trade, right?
Yeah,
Yeah,
absolutely.
and that's actually what's happening right now. Like a lot of the big hedge funds do this right now. They actually have bots that just watch this kind of stuff, right? And this is why for individual investors it's hard to win because these institutionals have all this stuff. So it's like for like for private citizens, right? For the individuals, it's like you're going to battle one arm tied behind your back. If you're not using augmented trading, right? If you're not doing machine learning, it's like you're at such a disadvantage. It's so hard.
How do you
I mean,
fight
this is
back, right? It's,
yeah,
these guys are making decisions in fractions of a second, and
yeah.
everyone else is like, "Oh, I heard about this. Oh, earlier today, 3 hours ago, right?" Like,
Good luck.
go
Good luck
late,
with
go
that.
late, right?
Yeah, that's too late, right? And that's why a lot of stuff has to be automated. You just can't win otherwise. It's just not possible. Right? You
Absolutely.
can get lucky, but it's hard. It's hard. It's hard. I mean, the only other way to do it is you do the long-term bets, like the Warren Buffett wild, like the value investing. You're like, oh, I think Coca-Cola is underpriced, and I think if we do some activist management of this and that, 5 years from now it's going to be whatever, right? So I think that is still great for human investors, right? But then you got to be like Warren Buffett. You got to have this incredible insight about like, oh,
Well, Warren Buffett, I mean, if you ever read about this guy, he reads financial reports like it's like that's the only thing he really does. Right?
Yeah.
Like it's his
Like
job.
fundamentals.
You know what I mean? Like he'll read a financial report for one company over the course of like a month,
Yeah.
from 1996 to today, that's like his
Yeah.
reading material. It's
Yeah.
very different than a machine learning model that can respond very quickly to
Yeah.
news events, right?
Yeah. That's where machine learning. That's where the big advantage of machine learning is right now is on this like super short term trading type of stuff.
Yeah, makes a lot of sense.
Yeah.
A lot of money to be made. I know your clients are making very good money. Let's continue that, Let's continue that.
I think the whole I think for me decentralized finance is a really and it's more than just crypto, but it's like the whole Web3. I think it's really uh, because if you look at the financial system, right? Like Shaw Schwab, I have Shaw Schwab. I get like 0.2% or something on my savings, right? And then the credit card,
US, or sorry, in Europe, you get negative interest rates.
even worse, right? And
You
then
put it to a bank account, you have to pay them.
for the privilege of them holding your money, right? And then like your credit card rates are like 20-30%, right? And then inflation is like they say it's 7%. I think it's way higher than 7%. At least like my own personal experience is way higher than 7%. And so like but the decentralized finance, the really neat thing about it is if you think about how much money the traditional financial institutions takes from the economy, it's just crazy, and decentralized finance is really democratizing all of that.
Absolutely.
Because it basically, why should Goldman Sachs or Shaw Schwab or Wells Fargo, why should they suck out all this value of the economy, right? They're not doing a whole lot. They're just moving numbers on a spreadsheet. So why do they get, why does Visa get 3%, right? It's like, it's crazy, right?
I agree.
And so like,
Greg.
so I think decentralized finance is really neat because all that like fat that the financial industry is like taking, right, for doing relatively little work, it kind of goes to the people.
Was like actually $40 for a wire? What does a wire mean?
It's
I'm sending money across the world. What was that? It means a database transaction. $40. Why? Like,
and it takes and the time it takes to settle, right? It's crazy. But anyways, I think the whole decentralized finance and then the whole Web3 thing, which is also really interesting because it basically, in the old days for like SaaS applications, you had to have a big enough value to, for someone to log in and then put their credit card in for the monthly fee and
Absolutely.
and to learn the website, you had to be big enough. But now with Web3, the data belongs to the user. There's no login, there's no password, right? It's all connected to your wallet. And so like, I use something called Beefy. Beefy is one of those liquidity pools, and they don't have a really great yield calculator on there. So I could, but some other third party made a yield calculator. So I could go from there to this yield calculator, and it's kind of cool because it's all like Lego thing people could build on top of each other. So it's like a whole. I feel like we're almost like it's almost like 1995 of the internet right now, right? It's just about to take off.
I've heard a lot of things where basically crypto, broadly speaking, that more the Ethereum type crowd, right? More of that type of Solana, like Ethereum. It's kind of like, what, like the beginning of the internet, right?
Yeah,
Basically.
I feel like it. I feel so. Yeah, I feel like we're at that moment. I feel like in the past, crypto has been like, people talk about scams and Ponzi schemes, and it kind of was in some ways, but
internet
now
was like at the beginning too, when the internet. Remember back in like 1999, you wanted to buy something on the internet, like
really sketchy. Right?
Like, it's sketchy.
Yeah.
It's same sort of thing. It's the beginning of it, right?
Yeah. But right now, though, it's getting really, really legitimate, right? I mean, there's all these utility tokens, right? Like, so if you want, like, cellular service, you could go to Helium, right? If you want file storage, you could go to Filecoin or IPFS. If you want, I mean, you name it, like they have some utility coin for it. So, so I think it's becoming real now, which is exciting.
Yeah, for sure. Greg, I feel like we need to get you to teach some course on crypto now.
Yeah.
You teach the ML. You're a brilliant person. Obviously, I mean, for those of you that are on this call and you don't know his background, Stanford is the most recent thing. UC Berkeley, funded by Andreessen Horowitz. Like, I mean, very, very strong credentials. And you know what? Screw your credentials, Greg. Forget your credentials. I think you are a brilliant person. Honestly, after talking to you over so many months and understanding you, you're a brilliant person. I think you keep up to the latest trends. That crypto is the most recent thing, right? I think, you've done very well with machine learning, but even now we're talking about completely different subject that you have become quite well versed in. Generally speaking, I think, Greg, you're a great person to learn from. I love speaking to you. You are a brilliant person, and that's really what it is, right? I mean, that's what it's about, right? It's learning from people that have done great things and are working on great things. People want to learn from you because of the things that you're doing, things that you're creating.
Thank you, Robert. But there's one other question here from Tyler. I think he says, it'll be neat to apply all this timelines and display stock price relative to the news release. So yeah, you could absolutely do that. And then you can see, yeah, he's talking about how there's a ripple, right? And actually, what's interesting is we don't really do high frequency trading. There's something called high frequency trading where they're trading like 10,000 times a second, right? So we trade every few seconds or every few minutes. High frequency trading is like thousands of trades per second, right? And those guys have like, there's a movie, I forgot the name of the movie, but it's about this movie about these guys trying to build a straight line connection from the, I think, Chicago Option Exchange to New York or something like that. And so like people will spend like a tremendous amount of money to get this, the latency of the connection down to like shave off half a millisecond. That's all you need extra, right? To front run someone else's trade, right? So good point, Tyler. Okay, I think we've pretty much exhausted everyone. Robin, thank you so much for the opportunity, and look forward to chatting with more people more about this.
Absolutely, Greg. Honestly, so for just to summarize it, whoever wants to take the course with Greg, this is a fantastic course to take. Machine learning. You can learn a lot about machine learning. You have had great success with a lot of your clients, right? After this conversation, I feel like we should probably do a machine learning related thing.
Well, I'm actually, what I'm doing actually, Robert, is I'm slowly morphing a bit of the course into crypto, just because I happen to be doing a lot of it right now. So
makes sense. I mean, machine learning and crypto, I feel like would be super, super beneficial.
The thing I really like about crypto is it doesn't close. The traditional stock market, it closes. And it's like, oh, what if you want to trade like at 2 o'clock in the morning? You could do that, right? So
Right, you showing the graph today, right? It's like what
yeah,
the difficulty is when like it closes and when you wake up in the morning, it's like, oh, I don't know what's happening,
yeah.
right? But if it's like constantly open, you're like way
Well,
closer in terms of machine learning.
yeah. So the neat thing about crypto is that there's more training data available because the market doesn't close, right?
Yeah.
Versus traditional stocks, the market closes all the time. Oh, Martin Luther King closed, President's Day closed, Christmas closed, right? So there's all this like it closed most of the time, It's like what the heck?
Absolutely. I think it's a great thing about you, Greg, in general, and the course that you're creating is, I feel like when we started this course almost a year ago, I think it's
Yeah.
been a while. It's improved a lot. You have gotten better you've gotten more polished at teaching it, and also like technology and life has changed, right? I mean, there's this new opportunity of crypto, and you're able to take advantage of that. I think that's really important, right?
Sure.
I think you're a great instructor. I think you're a brilliant person. I have nothing but great things to say about you.
Thank you.
And I wish you all the best. And whoever wants to join this course, I think they're lucky. I think they're lucky people to be part of your course and learning from you the great things that you're doing. Um, I have nothing better to say. I mean, it's fantastic.
I think you're all right. You flatter me. I appreciate it.
Right.
Okay, awesome.
Awesome.
Okay, great. Well, hey, it was great chatting with everyone. Thank you, everyone, for your for being interactive. It all makes these webinars better than you just talk to myself. So,
Yeah.
okay,
All right. Have a good night, guys.
okay, bye, guys.
Thank you, Greg. Thank you so much for your time and dedication. I love this.
Sure.
We're gonna keep growing this, and people love clearly. We see all this great feedback, right? Lots of thumbs up, lots of great things. Thank you very much, Greg, and I hope you have a great night. And
Sounds
we
good.
see you in the next course, right?
Yep, of course.
Yeah.
Yep, next week. Okay, thank you.